Hello, everyone. Welcome to the market opening bell for Tuesday, October 21st, your 10-minute guide to the stock market. The US and China have agreed to hold a new round of US-China economic and trade consultations as soon as possible. Mainland China announced Q3 economic growth of 4.8%, slightly better than expected. The fourth plenary session of the 20th Central Committee of the CPC was held in Beijing yesterday morning, where Xi Jinping delivered a work report and explained the 15 five-year plan proposal. Markets are watching for economic measures to be discussed at the plenary session, and Hong Kong stocks have rebounded from their decline. The Hang Seng Index opened up 637 points, rose as high as 665 points to an intraday high of 25,912 points, and closed up 611 points or 2.4% at 25,858 points. The Hang Seng China Enterprises Index rose 220 points or 2.5% to close at 9,232 points. The Hang Seng Tech Index rose 172 points or 3% to close at 5,933 points. Total market turnover for the day was 239.16 billion Hong Kong dollars. Southbound trading turnover totaled 109.866 billion dollars, while southbound funds had a net outflow of $2.67 billion. Among them, net buys include CSOP Hang Seng Tech ETF, 375 million, CNOOC, 162 million, China Life, 137 million. Net sales include Alibaba at 1.754 billion, Xiaomi at 340 million, SMIC 324 million, Innovent Biologics 225 million, UB Tech 150 million, ZTE 119 million. According to statistics, southbound funds have been reducing holdings in SMIC for 8 consecutive days, totaling $9.426 billion. Technically, the Hang Seng Index has recovered the losses from last Friday, but most technical indicators remain weak, including shrinking turnover that doesn't match the upward momentum. The Hang Seng Index formed a bearish doji candlestick and is still closing below the 50-day moving average, with the 9-day relative strength index still below 50. However, news can sway technical trends. On the A-shares market, the three major indexes opened higher by 0.7% to 2.5% and maintained gains, closing up 0.6% to nearly 2%. For Shanghai Composite, closed at 3,863 points, up 24 points or 0.6%. For Sunshine Component Index rose 124 points or nearly 1% to 12,813 points. For Chinex, Index rose 58 points or nearly 2% to 2,993 points. Combined turnover in Shanghai and Sunshine markets was 17.361 billion yuan. The yuan central parity rate against the US dollar was lowered by 24 points to 7.0973 per US dollar. The People's Bank of China authorized the National Interbank Funding Center to announce the loans prime rate LPR. 1-year LPR at 3% unchanged, 5-year plus LPR at 3.5% also unchanged. The National Bureau of Statistics announced Q3 GDP grew 4.8% year-on-year, slightly above the expected 4.7%. For the first 3 quarters, GDP grew 5.2% year-on-year, above the expected 5.1%. The 3 troika data showed 1 strong, 1 weak, 1 average. In September, value-added industrial output above designated size grew 6.5% year-on-year, far exceeding the expected 5%. For the first 3 quarters, value-added industrial output above designated size grew 6.2% year-on-year, above the expected 6.1%. September total retail sales of consumer goods reached 4.2 trillion yuan, up 3% year-on-year, in line with expectations. For the first three quarters, national fixed asset investment fell 0.5% year-on-year, below the expected plus 0.1%. National real estate development investment fell 13.9% year-on-year, worse than the expected minus 13.1%. Residential investment fell 12.9%. Sales area of new commercial housing was 658 million square meters, down 5.5% year-on-year. Residential sales area down 5.6%. Sales value of new commercial housing was 6.3 trillion yuan, down 7.9%. Residential sales value down 7.6%. At end September, unsold commercial housing inventory was 759 million square meter, down 2.41 million square meter from end August. Residential unsold inventory down 2.92 million square meter. China Mobile announced first three quarters revenue 794.7 billion yuan, up 0.4% year-on-year. Net profit attributable to shareholders was 115.4 billion yuan, up 4%. Earnings per share 5.34 yuan, EBITDA up 0.9% to 265.4 billion yuan. Q3 alone revenue was 250.9 billion yuan, up 2.5%. Net profit attributable to shareholders was 31.1 billion yuan, up 1.4%. Earnings per share was 1.44 yuan. EBITDA down 1.7% to 79.4 billion yuan. Zijin Mining announced first three quarters net profit attributable to parent was 37.864 billion yuan, up 5.45% year-on-year. Mining enterprise gross margin was 60.62%, up 2.91 percentage points. Overall gross margin 24.93%, up 5.4 percentage points. Q3 profit attributable to shareholders was 14.572 billion yuan, up 57.14% year-on-year and 11.02% quarter-on-quarter. Revenue was 86.489 billion yuan, up 8.14%. CATL announced first three quarters revenue was 283.072 billion yuan, up 9.3% year-on-year. Net profit attributable to shareholders was 49.034 billion yuan, up 36.2%. Earnings per share was 11.02 yuan. Q3 alone revenue was 104.186 billion yuan, up 12.9%. Net profit attributable to shareholders was 18.549 billion yuan, up 41.2%. Earnings per share was 4.1 yuan. Chinese e-commerce SaaS ERP provider 聚水潭 stock code 6687 will be listed for trading today. In yesterday's grey market on Phillip market closed at 42 Hong Kong dollars, up 37.3% or $11.40 from the IPO price. Excluding fees per lot of 100 shares, paper profit was $1,140. US President Trump in an interview said he has a good relationship with Chinese President Xi Jinping and expects to meet in South Korea by the end of this month. He anticipates reaching a very fair deal that's beneficial to both countries. Combined with White House National Economic Council Director Hassett saying the government shutdown may end this week, this drove US stocks higher. The VIX fear gauge fell 2.6 points or 12.3% to 18.23. Dow rose 515 points or 1.1% to 46,706. S&P 500 up 71 points or 1.1% to 6,735. Nasdaq up 310 points or 1.4% to 22,990. The Nasdaq China Golden Dragon Index tracking Chinese ADRs rose 195 points or 2.4% to 8,360. iPhone 17 shows strong sales in the US and China. Apple rose as high as 4.8% to 264.38 US dollars, closed up 3.9% at $262.24, a record close. Market cap rising to $3.89 trillion. Mainland media reported that within the first hour of Apple's official Tmall Double 11 launch in 2025, iPhone series sales on the Apple Store website exceeded last year's full-day total. Major banks say Apple is in the early stage of a replacement cycle, signaling sustained iPhone shipment growth through 2027. Several major companies will report quarterly earnings this week, including Netflix up 3.3%, Coca-Cola flat, Tesla up 1.8%, and Intel up 2.9%. Markets are gradually digesting last week's credit risk concerns, with Science and Western Alliance Bancorp each rebounding 4%. NVIDIA CEO Jensen Huang again criticized U.S. semiconductor export restrictions to China, revealing that due to U.S. restrictions, the company can no longer sell advanced products to Chinese firms, causing its market share in advanced chips in China to drop from 95% to zero. He admitted the company has fully exited the Chinese market. Huang said excluding NVIDIA from China isn't bad for China, but is worse for the US, as hurting China often hurts the US too, with even more severe consequences. He noted China has around 50% of global AI researchers, and that preventing them from developing AI on US tech is a mistake. Mainland media reported that Alibaba Cloud's compute pooling solution, Egeon, was recently selected for the top academic conference on operating system principles 225. This solution addresses GPU waste in AI model serving, significantly improving utilization. Core tech is now used in Alibaba Cloud's Bailian platform. Data shows during over 3 months of beta testing on Alibaba's cloud's model marketplace, Egeon reduced NVIDIA H20 GPU needs from 1,192 to 213 for serving dozens of models up to 72 byte perimeters, a 82% reduction. Our stock pick today is China Resources Gas, stock code 1193. China Resources Gas fully leverages the channel advantages and user resource advantages of its urban gas main business to develop distributed photovoltaics, distributed energy, and charging business tracks. It continuously enhances its comprehensive energy solution capabilities, building a comprehensive energy business with China Resources gas characteristics. In the first half of this year, it newly signed 71 distributed photovoltaic projects with an expected installed capacity of 63 megawatt, 35 distributed energy projects with an expected installed capacity of 127 megawatt, and 107 traffic charging projects with an expected installed capacity of 109 megawatt. The group also focuses on the Hong Kong traffic charging market, accelerating the development of traffic charging business, deploying all liquid cool supercharging stations, and promoting photovoltaic storage charging applications. As of the first half of 2025, it has invested in 15 charging projects in Hong Kong, of which 6 are already operational and 9 are under construction. In its urban gas main business, the group newly developed 831,000 residential users in the first half of this year, including 667,000 new housing connection users and 164,000 old housing connection users. On the other hand, while promoting the enhancement of resource acquisition capabilities, the group further improves its supply guarantee capabilities. In terms of enhancing gas source coordination capabilities, in the first half of this year, the coordinated scale exceeded 3.5 billion cubic meters, a year-on-year increase of 100%, acquiring 200 million cubic meters of unconventional resources. In terms of enhancing gas source assurance capability, storage capacity has been increased to 3.75%. In its in its comprehensive service business, the group continues to promote a brand new customer service model, deeply implementing grid management, which currently covers 41.85 million users. It focuses on building gas butler services, transforming customer business handling from service halls to door-to-door services provided by gas butlers. The enterprise WeChat has 26.9 million online users, with each gas butler becoming a mobile store for comprehensive services, creating the 1 million shops in 100 cities model, characteristic of China Resources Gas Comprehensive Services. Based on high-quality products and services, it enriches marketing methods for comprehensive service products. Online, it builds the CR Gas Best Selection online store. It revitalizes service centers, expands the scope of brand cooperation, and creates a comprehensive service product ecosystem, providing users with high-quality services and high-quality products. The group believes that through continuous and in-depth promotion, the comprehensive service business still has huge development potential in the future and will become an important component of its business. Recommendation: buy at 21 Hong Kong dollar, target $23.5, stop loss at $20. I personally do not hold the above stock.